All right, today we're diving into something that could totally change the financial game for millions of retirees. We're talking about home equity and, this quiet revolution that's happening right now to unlock its massive potential. So let's get right into it.
So it all starts with this number. That is just, honestly, it's hard to even wrap your head around it. $14 trillion. That's the staggering amount of wealth that's tied up in the homes of American seniors. It's like this financial giant that, for a long, long time, has just been sleeping.
For decades, right? If you wanted to access that wealth, the path was pretty narrow, often kind of restrictive. But what if that path just blew wide open? I mean, what if the tools to unlock it all of a sudden became more flexible, more powerful, and yeah, even cheaper?
Well, guess what? That's exactly what's happening. And it all starts with a really big move from one of the biggest players in the entire game. Okay, so Longbridge Financial, a major name in this space, just made a huge announcement. They're cutting interest rates, and they're boosting the loan amounts on their special platinum loans. Now, these are their own private products, totally separate from the usual government-backed stuff. And the goal here is pretty simple. Give seniors more financial firepower to fight back against the rising cost of living.
Now, this is where it gets really, really interesting. This slide shows you the direct impact. When you compare it to the traditional government loan, the HECM, which just stands for Home Equity Conversion Mortgage, their new Platinum Peak loan can let a borrower get up to 25% more cash out of their home's value. That is a massive difference. For someone's retirement plan, that's a potential game changer for sure.
But to really get why this is happening right now, we've got to look behind the curtain at the financial engine that's making these better deals even possible in the first place. So you're probably asking, how is this possible, right? How can a lender just suddenly offer more money at a lower rate? Well, it's not a magic trick. The answer is all about the growing appetite of a very different kind of customer, the big-time institutional investor.
It all works through a process called securitization. Now, I know it sounds super complicated, but the idea itself is actually pretty straightforward. Lenders basically bundle thousands of these individual reverse mortgage loans together, creating a kind of package or a security that they can then sell on the open market.
This slide here lays it out beautifully. It starts with you, the homeowner, getting a loan. Then the lender takes your loan and bundles it with thousands of others. Big investors, like pension funds, buy that whole bundle. And that move right there gives the lender a fresh pile of cash to turn around and offer even more and better loans to other homeowners. It's this powerful cycle where strong investor demand directly leads to better products for you.
And hey, don't just take my word for it. This quote from Longbridge's CEO, Chris Mayer, spells it out perfectly. He's saying that investors are so confident in these loan bundles that they're willing to accept a smaller profit. And that savings, it gets passed directly to the homeowner through things like lower rates and higher loan amounts.
And listen, this isn't just about one company's clever financing strategy. What Longbridge is doing is really a sign of a much bigger, industry-wide transformation. The entire reverse mortgage world is being reshaped as we speak.
Just look at this number. These private or proprietary loans now make up 40% of all reverse mortgage volume. That is a huge slice of the pie. It shows a really clear and rapid shift away from that old one-size-fits-all government option toward these newer, more innovative and competitive private products. And the pace of all this innovation, it's just picking up speed. So Longbridge kicked off its product line back in 2018. Just recently, they added more options. And now, we're seeing other lenders jump in with totally new concepts, like second lien loans that can sit behind your main mortgage, and even home equity lines of credit, or HELOCs, that are designed specifically for this market.
So what does all this competition and all this innovation actually mean for you? Well, it means you now have a bigger, more specialized financial toolkit to work with.
Okay, so let's take a closer look at the Longbridge suite, just as an example. You've got the Peak loan. This is designed for folks who want to get the absolute maximum amount of cash out of their home. Then there's Preserve. This is for people who maybe want some cash now, but they also want the security of having a line of credit ready for any future needs. And for anyone focused on the bottom line, there's a low-rate option to keep those interest costs down. It's all about providing real choices that fit different lives. And the options really do extend across the board. The minimum age for a lot of these private products is down to 55, which opens the door way earlier than the traditional 62. You can choose to get your money in one single lump sum, or you can get a flexible line of credit. You can lock in a fixed rate so it never changes, or opt for an adjustable one. The market is finally building a diverse set of tools to fit the really diverse lives of retirees. And all of this leads to a final, and I think a really fascinating idea that kind of reframes the whole purpose of this growing industry.
According to CEO Chris Meyer, the real competition isn't other lenders, it's inertia. It's that powerful force of people simply letting their biggest asset just sit there, dormant. So the goal of all this innovation isn't just to steal a customer from a rival. It's to fundamentally change how homeowners see their own equity, to transform it from just a passive number on paper into a powerful, active tool.
Which brings us to our final question for you to think about. With all these new tools and all these new options popping up, is your largest asset actually working for you, or is it just sitting on the sidelines? The answer to that question might be very, very different today than it was even just a few years ago.